estate and mortgage show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back to the show, everybody. So, Frank, on the heels of what we were talking about just before the break with the air quote conflict going on in the Middle East and prices and all that kind of stuff, and we also have the mortgage renewal wave happening this year.
Yep.
With the bond markets responding the way they are to all this, fixed rates must be going up.
It is. So now we've got a gap of anywhere between 0.5% to 0.75% between a fixed and an adjustable variable rate mortgage. So, there's still a number of Canadians, most Canadians, that are really stuck on the fixed and they're worried about interest rates going up. But, listen, there's no guarantee that interest rates are coming down. I just believe that the economic data says that if this conflict weren't around, we got to the point where in February we were seeing 5-year fixed in the threes and heading downwards. And until this conflict started, we were going in the right direction. But since then, the bond markets obviously have reacted. In the U.S., it's even worse. I mean, in the U.S., you're getting a 30-year mortgage or a 15-year mortgage, either anywhere between 6 to 8%. So you are talking significantly higher than here. And here, 4.5 isn't horrible. I mean, it's not a horrible rate, except for the cost of living is what's horrible out here. And everything that comes with owning a home, the taxes, the utilities, maintenance, everything is expensive today. And that's where Canadians are struggling, apart from, going to the grocery store. And I was at a very popular restaurant last night, and it was half empty. And, the owner came up and said, I don't know what's going on, but, boy, we've really noticed in the last 2 or 3 weeks how our sales are down tremendously. And I said, I hate to tell you, but I think that might be a trend moving forward because people are starting to hold back their money because they're just barely getting by. And, again, we get clients, and, Stefano and I talk to clients all the time where they've got outside debt. They've got credit card debt. They've got personal lines of credit debt. Car payments. They're looking for that cash flow magic. They want, even good income earners are saying, by the time taxes come off, we don't have as much as here we are making 200 combined, but we're lucky if we're bringing home 110 of it after taxes and everything else that you pay. So now all of a sudden we're trying to make ends meet. And normally, pre-COVID, that would have been a very healthy salary. Everything would have been normal. But now that the values of homes have gone up, so mortgages are bigger, utilities are more expensive, property taxes are higher, food's higher, that's where people are struggling today.
Well, the conflict, we call it, the war, is affecting so much. Like you just talked about, the rates, home prices, groceries, gas, everything is being affected right now. And we talked about the States in the break. Like the States is probably in worse shape than we are because it's just
more bankruptcies. They've had more bankruptcies this year alone. They are at record levels for bankruptcies in the U.S., and they're expecting even more as the year continues to go. So
I was in a store yesterday. I'm not going to mention the name of the store, but it's a type of store where you can buy lots of weight equipment and stuff like that. And I said, "How's business?" It's a little hard, and he's like, "I don't know why." And I said, "Well, it's because people don't have the extra money to be spending on something that they probably should be spending on, but they don't have the extra money to do that." And you keep. Think about during COVID, that those places were booming, right? Packed.
Oh, you couldn't buy equipment.
You couldn't buy equipment. Everyone jacked up the prices. Well, now they're struggling right now because people can't afford to go buy equipment anymore. They just can't afford it, and it's tough. It's tough, the economy right now the way it is, and that's why there should be a little bit more pressure on rates coming down because especially with all these mortgages renewing, rates need to come down. I mean, people are going to be in trouble. There's a lot of people living paycheck to paycheck.
Well, mortgages, and like we've talked about before, the rates affect business lines of credit and all that. So even business operations are significantly affected by rates.
And there's lots of businesses that do run off lines of credit. I mean, like you think of like an electrical business. They need to buy their supplies before going in and doing a job. So not everyone has 100, 200, 300 grand sitting in their pocket. They have to put it on a line of credit. Well, now this on line of credit is
accruing interest.
Is accruing interest. And so their business becomes less profitable. And it's like a domino snowball effect. And it's one gentleman from the States that's deciding all this. And it's tough. It's really tough.
They're passing on the cost to the consumer. And therefore the consumer is struggling to be able to stay on top of these costs. So again, I think you guys see it on the real estate side. For a client that needs to sell their house, and if they have to do some of the upgrades that you're recommending, some may not have the money to be able to do it. And now you got to ask yourself, okay, so I'm going to spend $20,000 to do these upgrades. I'm going to get $20,000 back. Well, forget it. Somebody else can spend the $20,000. I'd rather just put my house on the market as is for now.
Yeah.
And let somebody else do it.
We always talk about that, right? Like if you're going to do renovations to your house in order to get it on the market, please get us through the door first, because I'll probably save you thousands of dollars and tell you what to do and what not to do. I'm really big on not making you spend 20 grand to make 20 grand. If you're going to spend 20 grand, you're making 60 grand.
Yeah.
You know, you're making your money back.
It's an actual investment,
But it's an actual investment. But there's some things that people do. They don't call us before listing their house. They're like, hey, how do you like my new pool and landscaping? I just spent 100 grand. I'm assuming my house is worth 100 grand now. No, not even close. You know, so before you do a renovation, get us through the door so we can tell you what to do and what not to do. And there's a lot of times the bigger renovations, the more expensive renovations, like a kitchen or a bathroom, sometimes it's better to price it accordingly and not do the work sometimes. But at least get us through the door first before we do that.
Well, I know we had a caller last week that didn't want to come on the show, which is totally understandable. And
Was it Stefano?
I don't know, because it only went to Stephen, our producer. It didn't come right through to us. So, but the caller had asked. They said, "We're selling the family home close to the hospital. It's an older home, and we don't really have the finances to put in the extra work to renovate. There are no major issues with the home. With new zoning laws, etc. What are your thoughts on selling it as is without the renos?"
I think it's a great idea. I mean, if you don't have the pockets to do the renos, but you're living in an area like the hospital, which potentially is a bigger yard, the zoning rules have changed where some lots you can put 2, 3, 4, 5. I've heard as much as 10 different units on a lot.
And you could build up higher now as well, right?
You can build up higher. Now, if you're in a small little postage stamp lot in suburbia, different story. You can't look at the future value. But if you're in an area like by the hospital, I'm assuming they mean either the Civic or the General, one of those areas.
Yeah.
I mean, by the General's Alta Vista, which is large yards, you know, and by the Civic, they have large yards, some of those as well. So if you have the opportunity to put more units on your property and you're in an area that is known for that, your future use, you're able to then get a little bit more money on price. Right. Now, if you had the pockets and you could go put, you know, let's say you're zoned for 6 units on your property and your house is a tear down and you have the pockets to do that, I would definitely do that. But if you don't have the deep pockets to do that, you can still sell it for future use because somebody will come in.
that value.
Yeah. Like years and years and years ago, we put a lot on the market and it was in the corner of like a couple busy streets and it was in Orleans and my agent listed it and it was listed for like 1.3. And I'm like, who's going to pay 1.3 for that little tiny lot? Well, this lot, someone needed to buy this lot to build a big tower. So that they had to buy that lot. So they paid 1.3 for a little tiny, crappy little lot that someone saw the value in that. So for the answer to that question, someone will pay for the future value of that home.
Assuming it's a bigger
bit
lot.
Extra.
Yeah,
assuming it's a bigger lot.
Yeah.
But if it's just a house that's dated, I think what you have going for you is the fact that if you're near a hospital, there's a very good likelihood that there's somebody that works at that hospital, whether it's a doctor, whether whoever works at that hospital, that would love to be nice and close to the hospital,
100%.
Have a very short commute. I mean, there's a lot. You know, we talk about people buying in the outskirts. Gas is what, $1.80 a liter today. Your wear and tear on your vehicle, $190, $180. Yeah.
I know you have an electric car, Frank, so
you
don't know the price of gas, but
but now you've got the wear and tear on your vehicle. And listen, if anything is down right now, from what I understand, it's vehicle sales. People are hanging on to their used cars much more. People aren't trading cars in like they did 2, 3, 4 years ago because of the cost, and vehicles are very expensive today. Yes. So you're putting more wear and tear on your vehicle, which obviously is expensive too, along with the gas and your time. So all of a sudden, if you've got a house near the hospital and you work at the hospital, you'll spend $100,000, $150,000 because now you don't need a car. You don't have the wear and tear of the gas prices. And if you start taking all that into account, it's worth it.
And keep in mind, in these areas, like you look at, let's say, the General. You have Alta Vista there, very popular area. You look at the Civic Hospital. The Civic area is a very, very expensive area. And a lot of times when we're listing homes in that area, you're getting doctors who are looking at those properties. And a lot of the reason is a lot of these doctors are on call. So if I'm working at the General, I don't want to be living in Stittsville.
And you can
I want to be living
walk
in Alta
home in
Vista.
15 minutes.
You can walk home in 15 minutes because they're on call. They might be on call all weekend.
Yeah.
Something comes in. If you're a surgeon, something comes in, an emergency, you got to be there in 10 minutes. You can't be worrying about Queensway traffic. So those areas are very popular.
And if the house is still livable, then without the renos, then just do show it clean, show it as best you can, but sell it as is.
I've been saying, obviously, I said it earlier about, list with the right people, get your house ready and price it properly. But when I say get your house looking great, I don't mean go do all these renovations.
Right,
I mean, if you have a dated kitchen, if you have older carpets, and you don't have the pockets to fix it, not a problem. But you have to price it accordingly.
Right.
So there's an appetite, there's a buyer for absolutely everything. So to answer this guy's question, if you don't have the pockets, you're in an area, as long as it's a big lot, that could have some good future value, and people buying in those areas are renovating properties. So,
100%.
So I would sell it as is.
Yeah, agreed. Yeah, that would have been. I've seen dozens and dozens of homes like that in Alta Vista and the Civic Hospital area, and they sell quickly as is.
Well, and
they're very popular communities.
People would walk in and be like, "Who's going to pay this for this dump?" Well, guess what? Someone's going to see the future value.
A lot.
And then, within a year, you've noticed they've ripped it down. They put this beautiful monstrosity up there. And people are like, wow, now I see why they paid, that for that property, because they were able to turn it into that.
Yeah, turn it into something.
Yeah.
And there's too many neighborhoods now, I find, in the city of Ottawa, where you've got these mansions next to a war home. I mean, it looks kind of weird. But again, these are these lots that were originally set out at 50 by 100, 50 by 120, and now you can put two properties on lots like that, or you can sever those lots and sell them. So
you look into the zoning bylaws. So it just came into effect a few months ago. There's new zoning bylaws, and you'll be shocked. Like you'll be shocked that your lot. You'll be like, what? I could put 4 properties on there, or 4 doors, or 4. Like they've changed big time. You can go up 3 levels now, which. Some say that's awesome. Others say, I don't want a 3-level house beside me, or I don't want 4 properties on that lot. I won't be able to see this or see that anymore. So there's 2 sides of the coin, right? That some people are very unhappy with this, and others are like, wow, I have a war home in Vanier on a massive lot. I can rip that down and build something nice.
Well, again, we shouldn't be surprised at that. I mean, the city's mandate for years has been densification, right?
Yep.
Like it's not.
100%.
They've been talking about it for decades at this point.
Don't tell the builders that, because that's definitely not happened with all the new home builders. I can tell you that.
Well, no, but these laws are new,
Yes,
though, right?
these
And
new,
this goes towards these densification goals that the city's been talking about for decades, right?
Which is great. I mean, we got lots of immigrants coming into the country, and we need properties. We definitely need properties for these people.
Yeah. Well, and I'll tell you, living in Canada, back to the traffic thing right now, holy moly.
Yeah. One lane. It's incredible how one lane closure on both sides
shuts it down.
I mean, I think it's bad going east, but it's even worse coming west between Woodruff and Greenbank. I mean, it's lined up in the middle of the day. It's already lined up to Carling Avenue in the middle of the day.
A lot of times when I leave the studio here, I go to my cottage in Constance Bay, so I got to go Queensway right through. Sometimes it can take it could take me an hour to get to Greenbank.
Right.
You go that way all the time, right?
Yeah.
So. But you fly your helicopter. I don't have the.
I
don't have the funds to fly a helicopter.
I fly an electric car, which has got a little bit of pep in it.
Yes,
so,
It flies, Frank?
It flies.
It flies. Right. Have a question? Head over to realestateandmortgageshow.com and submit it there, or give us a call at 521-TALK. 521-8255. We'll be right back. Welcome back to the show, everybody.
So, Stefano, I know you don't want to speak, but just for a nod of the head, like, do you see how excruciating it is to be in the studio with your dad for a whole hour? I think I saw a yes. Did I see a yes? Yes.
That was an affirmative nod. Yeah. I witnessed it also.
And now we're stupid enough to do a podcast together, right?
Yeah, let's add on more to that.
Let's add on more hours.
You really don't want to spend time with me, so let's do a podcast. Yeah. Listen, I'm going to take the words out of one of your buddies. You've become smarter since you've done the show with me. I think your own friend tells you that. So
you know what? I'm not going to deny it, Frank. I'm not going to deny it. Yeah.
Again, thank you to Mike.
Yeah, thank you to Mike. Have fun in Vegas.
We used to say the same thing to Steve Gregory. Like, Steve was. He'd always say, you know what? I think you guys got smarter having me around for all those years. And I'm like, yeah, I think so too. Keep in mind when we started this show, I think I was 33 or something. I was brand new in real estate. I was 33, and you were 72, I think. That's
okay. Yeah. You were dumb at 33. You're less dumb at 52.
Less.
Just a little less dumb.
I will not deny it. I will not deny it.
Dumb, that's all. No, you know what? It's been 950 shows. I mean, that is crazy to think about. 19 years ago, we thought this would be a 1-2 year run. I mean, it was an idea that we came up with, Paul and I, and went to Jean Duval at the time and said, hey, I think you should have a radio show on real estate and mortgages. And it was just an idea and something we thought. And listen, I mean, we have gotten better. There's no ands, ifs, or buts. I mean, but at the end of the day, our goal was just to educate listeners on what to look for, what to do when it comes to your biggest purchase and your biggest debt. And we thought that had some importance, and I'm happy to be able to. And I still get lots of customers that call me and say, Frank, we listen to your show. We're big fans. We've learned so much from it, and that's why we're calling you. And it's worked. And I think you were, at the time, Paul, I mean, you were specifically Orleans. I mean, your market was Orleans, and now it's the whole city.
Yeah, absolutely. Absolutely. And 950 shows, that's incredible.
I should say hi to Chris in Finley Creek, who, when I went to shoot his house the other day, I walked in and he goes, I recognize that voice.
Yeah, there you go.
There you go, Greg. You're
going to get it at restaurants. I get it at restaurants all the time. Hey, you're the mortgage guy. We listen to you all the time. So it's kind of cool. And again, I mean, anything that we can do to help, I mean, that's what – and listen, we want to build our businesses. Obviously, you do this to build your business. But at the same time, if you build your business the right way by helping other people, I think that speaks for itself right there.
Well, I've seen a lot of people over the years who have listen, I listen to you and Frank, and you talk about doors, and Frank tells me about the mortgages. I got 3 investment properties just by listening to your show. And I'm like, amazing.
Yeah,
awesome.
That's
amazing.
incredible.
That's why we do it, right? So Frank, you're the math guy. So when will we hit show 1,000? That would be.
Well, we're going to hit it next May, right?
Yeah, early May.
Next May. So depending on
late April,
whether we
early
take
May.
any. Sometimes, like over Christmas, if it runs on a Friday, Saturday, Sunday, we don't do Christmas shows. So, but it'll be sometime in May, probably early to middle of May next year. Will be our 1,000th show. So we'll have to have a little party. And
I was thinking maybe you could buy breakfast that day.
Yeah, maybe. Yeah,
it's been decades, so why not?
I thought that conversation was over.
Well, you have to bring it up.
I just thought it would be a great time for him to actually treat me for something.
All right, so just before we wrap up today, I know, speaking of listeners and questions, our longtime listener Josh, who's submitted several questions over the last few months, and it wouldn't be a complete show without talking about the HST situation.
Yeah.
So Josh wrote in and said, hello, do you have any thoughts about why there's such a long delay from the provincial government on passing the PST provincial relief on new homes? I signed October 25 and closing September 26, and I'm getting a little anxious that it won't be passed before I'm closed. No.
So again, I mean, when he bought, I can't remember when the provincial government came out with their PST, but it would have been in the fall sometime. Yeah. So depending on when he bought, I don't know if that timing, so the GST has been talked about since last March, and then the PST entered the conversation in the fall. And believe it or not, the provincial government has passed their side of it. They're waiting for the federal government to pass the entire GST, PST, so the HST in Ontario, because it's different in different provinces.
Right.
What we've asked for clarity, and again, I've been to Parliament Hill and I've been to Queen's Park, and we've asked for clarity as to people that bought prior to April 1st, whether they qualify for this rebate, and to give us some specific direction on how to process anybody that bought in September or October. Like, they necessarily don't want to go to the builder and redo a new contract in April, but it feels kind of underhanded that somebody that bought in October of last year isn't getting their home until September of this year, has purchased a home for $800,000, and then somebody that may have bought next door the exact same home but bought in April, and they're going to get it maybe in November or December of this year, and they're going to get it for $100,000 less because they get the rebate, and you don't get it even though you haven't gotten the keys yet. So
it's really slowed down the market right now for new home builders, because people are like, we're working with. I mean, obviously everyone knows I do all the sales for Clement Homes. We've slowed down a little bit with Clement, only because there's a lot of people who are like,
there's so much confusion around.
There's confusion. They're like, I don't want to buy right now, and then find out 2 days later that they're not backdating anything. So I mean, their talk is they are, but who knows, right? We also thought this would be done. So we have a lot of people that are waiting in the wings right now to get the firm rules of what's going on. And like Frank said, it's passed. We just don't know all the rules and implementation of
how it's happening.
Because now
even lawyers.
Now CRA's involved, and all these people are involved, and it's happening, but no one really knows how it's happening. So,
Josh, thanks for the question, and we'll do our best to keep you updated.
And stay in touch with your real estate lawyer, too, because sometimes
100%.
real estate lawyers get some heads up as well ahead of time. So, again, your real estate lawyer is somebody you should count on as well to help you navigate between now and when your closing date happens in September, how it's done.
Absolutely. Frank, birthdays this week?
Yeah, I've got a couple of birthdays. Pietro Zanetti, good friend of mine, and Rolando Delabio. Both of them turned 65 on Thursday, so happy milestone birthdays to both of them. My beautiful mom, 91 years old on Thursday, so my mom's celebrating her 91st, still living at home with 2 kitchens in Barrhaven by herself at 91 years old. And then wish everybody luck on race weekend, a beautiful, wonderful weekend here in Ottawa where it really helps with tourism and the city is alive during race weekend. So good luck to everybody participating in race weekend. Nobody in this room is doing anything racing.
I am. I'm watching.
Yeah,
so I just want to say, guys, like I mentioned before, go over to YouTube, Real Estate and Mortgage Show, subscribe because our podcast will be starting very soon. And I just want to say this show was really special because I finally met a Napolitano with some brains in the family. So it was great having Stefano in the studio with us. And have a great weekend, everyone.
Thanks for joining us, Stefano. Have a great week, everybody.
And continue to support local business and charities, everyone.